Welcome to Beyond Table Talk, a space for real people and real conversations that move us from awareness to action. Each episode dives deep into the issues that impact our daily lives, financially, emotionally, and socially, with real talk from real people. We're so glad you've joined us, and we've got a powerful conversation ahead. Whether you're tuning in live or catching the replay, thank you for being a part of this community. Now let's get into it. Meet our moderator.
Hello and welcome to Beyond Table Talk, a signature conversation powered by the Association for Black Economic Power. I'm Sharon Taylor, and I'll be your moderator for tonight's conversation on decoding insurance, life, health, auto, and renters. Before we get started, please scan the QR code on your screen to complete our brief pre-survey. Your feedback shapes our future conversations like this one. So before we begin tonight's discussion, we would like to recognize the supporters who help make programming like Beyond Table Talk possible. We extend our sincere appreciation to Affinity Plus Federal Credit Union, Wells Fargo, First Bank and Trust, and the Archie and Berneth Walker Foundation. Their investments help expand access to financial education, economic opportunity, and community-centered programming. We are grateful and thank you. For many people, insurance isn't something that they don't necessarily care about. It's something they've put off because it feels confusing or expensive or both. If you've ever wondered whether you really need life insurance, what your options are for health coverage, or whether renters or auto insurance fits your budget, then tonight's conversation is for you. Tonight, we'll break down life, health, auto, and renters insurance, answer some common questions, and help you better understand your options so you can make informed decisions. So, we are joined tonight by two guests who bring years of experience helping individuals and families understand and protect what matters most. Georgia Lynn, let's start with you. Please introduce yourself and welcome.
Well, hello, my name is George Lynn Hicks. I'm a State Farm Insurance agent owner in Dalton, Illinois. I come to you with 40 years of experience. I started in insurance as an automobile insurance claim adjuster, where I helped our customers understand their policies and the benefits of the insurance after an accident. Later, I found that people were very confused about insurance and their policy. So I had a mission to help educate the community and consumers how insurance can help. I also am someone who has experienced a life insurance loss. When I was a teenager, my dad died at age 46. He and my mom had just purchased a house, and my sister and I were teenagers. We wanted to go to college. Well, fortunately, they had purchased life insurance 3 years before, and we were able to pay the house off, stay in our home, and my sister and I went to college. So insurance really is very personal to me in many ways.
Well, thank you. Wow, that's quite a story, and I can't wait to dive a little deeper into that. I'm sure it's going to be some valuable information for our viewers tonight. I also want to welcome tonight Pia. Thank you for joining us tonight, and welcome again. For our viewers who are avid viewers, they may recognize Pia Thibault is joining us again tonight. Please introduce yourself, your background, and what led you to becoming a personal risk specialist, and how your work helps individuals and families protect their financial future.
Thanks, Sharon. Hi, I'm Pia Thibault. I am an insurance advisor with Legacy Insurance Group. I've been in insurance for some years, as she mentioned, and just being in the field, realizing that a lot of people don't understand why we need to have insurance and how it works. I've taken that on as a personal thing of mine to go around and just make sure that I am educating people on why we need insurance, what it's used for. I do some coaching with the home stretch courses when people are purchasing new homes. I do the insurance portion of those classes and a lot of community work just teaching about insurance and answering questions. So I'm happy to be here today. Thank you.
Thank you. And thank you. Welcome, both of you. As always, we invite our viewers to stay engaged in tonight's discussion by joining us in the chat. Please put those along and we'll get to those questions or comments that you have. And we appreciate you being here tonight too as well. So if you two are ready, I'd like to dive right into some questions about this. Why insurance feels so complicated for people is one of the things that I want to talk about. Many people may find themselves avoiding getting insurance because for whatever reasons, but usually it's not that they don't care. Maybe it's complicated and they're not quite sure about it. They may avoid it because of it's expensive. So why do you think so many people feel overwhelmed before they even get started about it? I'm going to start with you, George Lynn.
Yes, insurance is complicated and it is confusing. It's like anything you don't know until you know it. There's the unknown, and it can be fearful. But what I find is that once you think about the loss and the risk that you're trying to protect, and what it is you want the insurance to do for you, and get connected with an advisor, someone who can answer your questions, someone who you feel a relationship to. That helps with the insurance process. The other thing is that having no insurance is more expensive than not having any insurance at all. Think about a situation where you're in an auto accident or you buy a car and you buy a loan with that car. You have an accident and the car is totaled or destroyed. Would you rather have the insurance company pay for the car to be repaired or replaced, or would you want to pay for it out of your pocket? That's what insurance does for you. It gives you it provides protection for that risk that can possibly happen.
Yeah, I guess that is true. You wouldn't want to get caught without it.
No.
I find that out, but Pia, when someone says, I know I probably need insurance, I know I'm gonna get it, I'm getting to that, but they also know, like, what do I actually need? Like, how much? What should I do? Where do they begin? How can we help them figure that out?
Well, I begin my process with a conversation just to get to know them and get to know the things they're doing. Do they drive a vehicle? Are they renting? Do they own a home? And then we're going to start with the insurance that's required by law, at least liability insurance on your vehicle. So if you get pulled over or if you get into an accident or have an issue with that you do at least are following the requirements of your state to have those limits of liability so you don't end up with extra tickets and extra fees for not having the insurance. Mm-hmm. So we start there. And then within the conversation, you just get to know them, know their family and different needs that they have if they're renting, and add the insurance from there. We can get the renter's insurance and then talk about the life insurance. So you just start mostly with the conversation to get to know them and the things that they're doing to help protect their family.
Mm-hmm. So you start out with some kind of consultation, like talking about where are you in life and what do you need? Do you have a teenage driver in a house, or are you renting, or is this mortgage? Those sorts of things to get started.
Definitely.
Okay. Well, good. So people need to make sure they schedule time for that. Schedule time to get the full picture. You're not just being nosy.
Yes. At least like 10 to 15 minute conversation just to do a dive to see what your needs are, because everybody's different. You know, some people don't have a vehicle, they're not driving. So maybe that's not where we start. So just to get to know the client and their personal needs and then tailor your recommendations around that.
Mm-hmm. Awesome. What are some misconceptions? I'm going to ask both of you, like, what are some misconceptions or one misconception you hear all the time that leaves people either paying for coverage they don't need, or having a coverage or not having enough coverage they should have. What would you say, George Lynn? And then I'm gonna pop it back to you, Pia.
Yeah. I think people feel like that the insurance is a requirement by law or when they buy a home or a property, and they don't understand what the insurance provides for. So you don't really understand, in many cases, why you're purchasing it. I think that's a misconception. And so having that conversation with someone about the benefits of the insurance and the what ifs. I think people also want to protect their assets. And that's a place where we start the conversation at. What is it that you have that you'd like to protect that you couldn't replace or don't want to replace if it were lost or destroyed? And so in developing those kinds of conversations, then we can also show where insurance is needful and valuable. In an example would be someone who has life insurance, or they purchase life insurance for a home protection. As I said, that's going to protect that mortgage if the breadwinner dies. And life insurance can also have life benefits for you as you live. They have cash values and dividends that grow. So it's not all about death, but it can protect your assets. And I think that's the misconception that people have.
Mm-hmm. So I hear you talking about what people may hear: term life versus whole life, or
Mhm.
those types of different life policies, right? That people may dig into. And it's not just about death
Mhm.
that you can, okay.
Absolutely.
Okay, that's one of the misconceptions. I guess I definitely have heard of that.
Mhm.
Pia, what would you say?
I would say some people have had maybe experiences where they've had insurance and they tried to file a claim and it wasn't paid. So now they feel like they're paying for something that's not going to work for them. And that's one of the things that we make sure we get down to in that discovery conversation. For example, if you own a vehicle, let's say, Sharon, you own a vehicle, it's titled in your name, but I'm borrowing your vehicle. I get insurance on the vehicle is totaled, and then we find out that the vehicle's not covered because the insurance is written in my name and not the name of the person titled to the vehicle. So those types of situations and things just need to be discussed when you're going into the situation, explaining to the client. As long as we write the policies correctly, we read the policy language and make sure what we're needing to cover is actually covered by that carrier. Then when you have a claim, we won't have a surprise where they're not paying out anything because everything is written properly. So that's one of the biggest things that I see people getting upset, where I had this claim and it wasn't covered. And of course, claims are on a case-by-case basis, but simple things like making sure that we have the policy written correctly and the policy language shows that this would be covered at loss is big. I think a misconception with clients.
Mhm.
So, yeah, I've definitely could have that, and that seems like that would be frustrating. You're paying into a policy, and then when you think you need the policy, like in this case, your example, they had an accident or something, and it doesn't pay out because of something else, for various reasons. And you definitely want to make sure you're taking care of that along the way. Now, you both mentioned about law requirements to have insurance. And I think in one case, as it relates to being a homeowner, and as it relates to having a loan on a car. Now, is that a misconception? Because there's some truth in that, validity in that you have to, right?
Mhm.
I want to make sure I clear that up for our audience. Okay. So go ahead, Pia.
If you have a mortgage on your home when you're purchasing it, you have to have the insurance. But some
Right.
people purchase with cash and they choose to self-insure, which is totally fine. But for the mortgage requirements, you definitely need to have that insurance in order to close on your home.
Absolutely. Okay. And were you going to say something, George Lynn?
Yes, and also you have the protection of the asset. Most governments, I know here in Illinois where my office is, requires insurance for your vehicle, and most lenders require some insurance to protect their asset. So they're smart enough to protect their asset on a contract. I think we should do the same thing as an individual. And again, it's pennies on a dollar. You have say $100,000 house, you pay, $1,000 a year for insurance. You lose the house through a fire, the insurance company is going to put up $100,000 for your $1,000 that you put in that annual premium. It's protecting your assets for pennies on a dollar.
Yeah, I wish we could get a house for $100,000 these days. But yeah. I appreciate the nice round number.
The math. It's the math.
Geez, that was a thing.
So,
yeah, for someone who's watching tonight who doesn't currently have one type of insurance or another, or maybe they need several types of insurance because life simply has gotten in a way, what would you want them to know? Where would you go with that, Pia? And then I'm going to jump to you, George Lynn.
Sure.
And then that goes back to that discovery situation, that discovery conversation. I would want them to know, let's say we'll go with the renter's insurance. Having renter's insurance protects your personal items, all of your clothing and furniture that you have in your home. It also protects your liability. If you do something and burn down the unit, your unit and someone else's, and now you're sued for that, it can protect that as well if you have the accurate limits. And it has coverage for you to go live elsewhere while your apartment is being rebuilt. I think that is a very good coverage and just star that we need to highlight. When people are purchasing these policies, they don't really understand all the different things that it can cover, and just explaining that if you have to go live somewhere else, because a lot of us, if you're paying rent somewhere, 5th of the month, you just paid rent and now there's a fire and you can't live there. A lot of people may not have the $1,000 or whatever it may take to go right away and go be somewhere else comfortably. And now you're providing food and taking care of your family with money that you've already possibly spent at the beginning of the month. So just knowing that if you have that coverage, that policy will pay out that money to keep you comfortable until you're able to get back into your home for sometimes up to a year or two. So just knowing that is available to people, I would kind of start there with them and then move into the maybe life conversation if they're not driving a vehicle. But just trying to get them to understand how it can give you a place to stay if there is a loss.
Mm-hmm. Looking at those several types, and then you gave that renter's example. So poignant, on key. I mean, we hear constantly on the news, there's always some fire, or unfortunately there's a season here in Minnesota. We're hearing about tornadoes and things like that leave people in a situation where they may need to go somewhere else and pull from that insurance to make sure they have proper housing and new clothing and those kind of things until time is passed. George Lynn, what would you like to add to that as we talk about the several different types?
Absolutely. And just to kind of piggyback on what Pia said, absolutely. Renters are more prevalent now than many homeowners with the cost of mortgages. More people are opting to rent versus to buy. So therefore, they have assets, they have things that they want to take care of. You have a whole house full of furniture. You want that furniture taken care of and replaced if there's a fire or a loss. But more importantly, and I often tell my customers, if you have a loss and your home's uninhabitable, would you want to go live with your kids or your friends or sleep on their couches? Or would you want the insurance to provide that living expense for you, which it can do? And then just, again, that conversation, knowing what's important to the individual, what you have right now. And I think you asked Sharon if they couldn't really afford everything that they could provide for. I believe let's get what we need today, get something is better than nothing, and then build on that and go forward. So if you can only buy a certain amount of life insurance, a certain amount of renter's coverage and protection, maybe you add a higher deductible, which brings down your premium, and perhaps you put on some more discounts that the carrier might offer to bring down the premium. And those are ways that a person can have something versus nothing.
Mm-hmm. Yeah, that's a great tip. Thanks for that. That's a really great tip to add. Yeah, I couldn't imagine. I mean, if you had to, you had to, but this back at this age and sleeping on somebody's sofa, Get the coverage. Get the coverage.
Get the coverage.
So just to bring it up, let's talk specifically about, as we're talking about different types of insurance, let's hone in on life insurance for a moment here. Many people here, they should have it, especially at a certain age. You get older. Which is one of the questions. What's a good age to have life insurance? Is one question, but do we understand why we need life insurance, other than we talk a little bit about that in the beginning? It's not just for death. What is life insurance designed to do, and who should be thinking about it? George Lynn?
Mm-hmm. Yeah, life insurance is for everyone. Life insurance also offers you protection when you have a death, when you have a mortgage, when you might have financial needs to protect someone who is that you have a responsibility for, or it can also provide for living benefits. There are dividends in a cash value life insurance policy, and those dividends can grow and be used for any purpose you have a desire for. So and you talked about, Sharon, term and whole life and universal life, which are all life insurance, but they have different scopes. So someone might purchase a term insurance because they just bought a house and they want to protect that mortgage, or they have debts and they want to protect the debt, like a car loan, and that could be an auto loan protection. Someone would probably want to have whole life insurance because they want final expenses and they want to protect those final expenses, like burial, or to have it go into their estate. And then that universal life is kind of a blend. It offers the life insurance at a term rate, but also has the longevity of a more permanent whole life policy, and it has cash value. So it's really a very popular policy that people are purchasing now. The main thing is get it at the price you can afford, and then if you need to buy more, buy more.
Okay, so at 20, you said it's for everyone. At 20, you should be looking into life insurance. 50, you should, if you don't already have it, you would recommend. And yes, you both are nodding.
Yeah. And I say 20 is perfect. You're at the youngest, probably the healthiest you'll ever be, and the life insurance is the cheapest it is. So you're locking in the value, especially if you're getting term insurance. I mean, some term insurance policies for a 20-year-old are like $18 a month, depending on the carrier, or even whole life. If you're going to then lock in whole life, and then especially if you get universal life, which has a dividend and it pays to the account value, so it's growing for you. So when you are older, you can pull those monies out and use them for yourself. You don't have to die to get it.
That's a benefit.
I like that.
I appreciate that.
Yeah.
Well, that is wonderful. I appreciate you breaking down the difference between term, whole, and universal, and so our viewers can walk away with having those at least groundwork of those the vocabulary for those words, and I'm breaking those down a little bit more so they can dive deeper into that. Pia, can we talk a little about health insurance? Insurance. Health insurance can feel definitely overwhelming, especially if your employer doesn't offer it, and you need it, or if you're self-employed and so you are the employer. What options should people know about, and where can they begin looking for coverage? So
there's several different places that you can go looking for coverage. I'm a broker. I sell health insurance, but I would advise people to go to like healthcare.gov first, just to see if there's an option there, because they have some options depending on your income for sliding scale fees, some options that are a lot less expensive than having to just pay out of your pocket completely for the entire plan. So I would maybe help them do that first. And then when looking at the coverage that you would like to get, you want to think about your health at the time right now. Like, do you have any chronic illnesses, or do you have medications that you need to get? on a weekly or daily basis. So when you're looking for the plan, because they'll all have different pricing, some of it will cover some medications and some may not cover other medications. There'll be different deductibles and co-insurances that you have to take into consideration. So you want to assess your situation first. What do I need? I need these maintenance appointments. I need these medications. So now when I go look at the plan, does the plan cover this? How much will I have to pay out of pocket? And kind of start from there when you're looking for the coverage.
What would you tell our listeners who feel like, well, I haven't had health insurance, and we know that here in Minnesota, facilities will see you, and in other states, you can't be denied not to be seen. What would you say to them about why they personally need it versus using it like the ER as their primary care physician?
Like, they will see you to stabilize life, right? But if you have an issue that's uncovered during this appointment, you might not have the coverage to get that maintained. If they find that you have an issue and you now need MRIs and CAT scans and things, you might not have coverage for that. Some of those specialty clinics require payment up front if you don't have insurance. And an MRI or CAT scan could be in the thousands of dollars. So you don't want to wait until you absolutely need it to try to purchase it. You might have to worry about some pre-existing situations where maybe now you can't get coverage here, or they're asking a bunch of questions and it's a little more expensive. So you always, with insurance, you want to have it in place prior to when you need it. Because when you need it, if you don't have it, then it's almost always too late for it to work properly in those instances. So you may want to go to the ER if you have an emergency, but you want to have some type of plan in place. And with all of these different plans that you can get from your healthcare.gov on sliding scale fees, different premiums, or you can see a broker that can tailor something to what you need. There's a bunch of different options for you to be able to get something that will cover you.
Oh, wonderful, wonderful answer. Just if you said, thank you. I just want to spend a little time giving a shout out to the people who are our viewers who are paying attention and listening. And I have an AT Hicks who's like, great answers, ladies. Appreciate you being here tonight. And Darlene is here, one of our avid listeners who has looks like a comment and a question. A lot of the information is written in legal jargon. How can you determine if what you think you're getting is what you're actually getting? And I think Darlene is referring to, just based on a time, is she's talking about legal jargon that happens in our contracts, our life insurance policies, and those kind of things. Darlene, help me out if that's not where you were going with that question. But how can you determine if you're getting what you actually are getting? Pia, I know that you talked a little bit about the consultation and going through that. Is there some avenue thereafter when you get that contract in hand that people can say, well, I signed up and it's 25 pages of stuff? How do you know it's actually what you need?
This is why I always recommend speaking with an agent versus just purchasing something online. When you purchase through an actual person, then you could go back and ask those questions. They could go through the documents with you line by line if necessary and explain to you exactly what you're getting and exactly what this means. It's a lot easier to get that when you're working with a person versus just doing it online. Now you have to do Google searches. Just cut out all the questions, get an agent, an advisor, get a relationship with someone. Then you can go to them and ask, and they'll be able to explain it to you. That's what we're here for, right, George Lynn?
Absolutely, Pia. I think the insurance agent should be treated like your physician, an annual visit. You would look at, because things change in all of our lives. We have drivers that come in and out of our houses. We have things that change in terms of what our needs are. We might buy a different home. I think, our needs for life insurance might change. Our need for health insurance will change. So treat your insurance agent like your advisor. And in my office, we set a process where we would meet with our customers biannually, and we ask them to come in. That way we go over their coverages, we go over the policy, we answer any questions, we find out what's new in their lives, and it keeps from having those unexpected claim issues that Pia talked about, and probably Darlene was referring to. You don't, and even as an insurance agent, you don't want to have that question come up or an incident come up where you weren't clear with your customer.
Hey, is it doing too much if you have your agent phone number on speed dial? Because I be calling my agent all the time, and we live in the same neighborhood, so I've actually bumped into him a couple of times. It said, by the way,
I just had someone ask me a question at church on Sunday, so
exactly. Yeah. So I love that, though. I love that in this age, in this new age of technology, yes, you could go online and you could complete the questionnaire as best as you could, and they'll crank out something. But it's nothing like being able to say, hey, Pia, I got a quick question. Am I on, or can you look at page 12 on this, versus in building that relationship, even if it's biannually or as you recommend, at least twice a year, right?
Mm-hmm. Yeah, it's good.
Yeah.
It's very important to make sure that we're picking up on different things. People purchase new jewelry, add additions to their home, and you added $100,000 worth of value to your home. You didn't add it to your policy. 2 months later, you have an issue, and now you're not getting paid out that extra $100,000. Like, that's a big loss. So making sure that you have that relationship with your agent is very important.
Yeah, someone else is chiming in. Thank you, saying, I'm so glad you brought up the relationship that you can have with your agent. Absolutely. And I wasn't joking when I said I do have his number and be texting him freely. Like
my clients do too. No problem at all.
Things happen.
Definitely.
And I so appreciate that he's like on the money with it. I know. So yes, instead of, I'm not steering away from, we're not here selling any products, but having that personal relationship is so key to life changes. George Lane, you spoke about drivers in and out of the house. I'm speaking of, teenage drivers, or I just found out that you can get a discount for a certain age of like 55 or something. You can get a senior discount. I mean, so there's all these things that you wouldn't necessarily know if you're just online per se.
Absolutely. I'm so glad you brought up the 55 mature driver discount. It's an important discount, and it helps just re-educate our anyone who's over 55. I say it's like driver's ed in reverse. So those are discounts that are available to you, and most carriers offer it. And then there's discounts, I think, that people that go unseen. There is a discount for having good credit when you're trying to get car insurance and home insurance. So that's a very good a tool to use, along with deductibles. We talked about deductibles earlier. Deductibles can also help manage the price of insurance and kind of help you if you're a good driver, a higher deductible, save the money, put it in a savings account that's earning you interest, or use it to buy some other insurance product. And then, if you have that savings for a rainy day when you need the deductible. But good drivers usually don't need that. There's also premium discounts that different carriers offer for bundling. I think that's a avenue that many people are using nowadays to tailor the cost of their insurance, as well as discounts for having good students, discounts for making sure that the drivers that are in your household are using telematics. I'm sure telematics is big nowadays. That's the way insurance carriers are able to determine the risks that they're going to insure and the price they're going to insure. So if a carrier offers a telematics, I think it's really important that an individual considers using it. Oftentimes we get people saying, I don't want anybody to track me. Well, our cell phones are tracking us anyway. So, our vehicles are tracking us. So let's get a discount when we can.
Okay. So I haven't heard much about that, but with telematics, I know that that's an option. And so they're actually tracking like the speed that you're going, asking for a friend.
Speeding and hard braking, yes, and driving after midnight. So within that discovery conversation, find out if the client is a speeder, because if you are, then you don't want to do the telematics because that could increase your premium. But if you are driving the way we're supposed to be, it can be a decent amount of savings.
Oh, wow. Good to know. Good to know. How does this all connect to generational wealth? Darlene would like to know.
Protecting your assets. So you're purchasing a home, purchasing these vehicles, trying to save money for your future. If you have a loss that's uncovered, it can cost hundreds of thousands of dollars. And this is the thing, if you don't have the money right now, they'll wait. They'll take it out your future earnings, and then they'll take it out your death benefit. It's not going to just go away. So with the generational wealth, how that ties into asset protection, risk tolerance, making sure that you have that in place. So if you do suffer a loss, that insurance plan kicks in and brings you back, indemnifies you back to where you are, makes you whole. So you didn't lose any of the $500,000 of equity that you have in your home or what have you, having to reach into that and paying for a lawsuit. Right now, we're in a lawsuit happy society where everybody's getting sued for all types of things. Another coverage that's important is your liability coverage on your home. Having personal injury coverage attached to that. It's an endorsement that you can add. So if you're out in the world and you do something accidentally, now you're getting sued for that. Now you have to go to court. Your property policy, personal injury coverage can help you with the fees and court legal activity that you have, making sure that you have that, because those are things that could wipe you out for years, paying hundreds of thousands of dollars. And that's how that's tied into that generational wealth piece.
Okay, so very thank you for those examples and making sure that those are actually in your policy. George Lynn, were you thinking about something else you wanted to add to that?
Yes, I was thinking about an example that occurred that I saw in claims where there was an individual who had the lowest property damage limits from their automobile insurance policy. And in my state, that was $20,000 at the time. They happened to have a single car accident where they ran into a guardrail that was owned by the state of Illinois. They ran into the guardrail and they ran into a light post. It turned out that the damage was over the $20,000 that they had for their property damage on the car insurance. Well, lo and behold, the state of Illinois sued them for the difference from their policy. And the low limits that person had didn't really protect them. So then they got themselves in a situation where they had to get a judgment in order to pay off that difference. Having additional coverage or having the right coverage is so important. When you think about how much you make annually and you look at your automobile and policy limits, and if they're very low, if they're lower than what you make annually, you need to correct that and talk with your agent about getting better limits, because those liability limits actually protect you in the event of a loss. You want the insurance company to pay all of the loss, and you don't want to go to court to have a judgment set against you.
Oh, I appreciate that example. That makes total sense to me. And just having that little bit of coverage, speaking to that honestly during the time when you are, like Pia said, having a consultation and or as life goes on, there are periods where life changes. And so you may want to talk to your agent about that and making sure you have adequate coverage so that things outside of the home that's also in that policy can be covered. That completely makes sense. I had a question from A.T. Hicks, who's joined us 19, who's saying, how can we help young people understand the importance of having life insurance early in life? So we talked earlier about getting life insurance, and that's for everyone. And I just threw out a random age of 20. But this question sounds like it's going a little deeper, like, if they brush us off and say, yeah, I'm not doing that, or I can't afford that, how can we, what can we say? How can we stress the importance of it?
I think it goes back to what George Lynn said earlier. The earlier you purchase it, you are locked in at that price for some policies. So you get that $20 a month for, let's say, just an example, this is not, but just maybe $75,000 worth of coverage is $20 for you now at 20. At 50, it may be $100 for you. but you already had that coverage in place. And now some policies will lock that price in, and that's the price that you pay for the term of the policy. That's the importance of it. And being young, I understand that a lot of us young people, I won't say us, young people feel, invincible and nothing's going to happen to me. We don't know what's going to happen. And you don't want to leave your family responsible for those end of life fees, because they could be up $10,000 or more. Having something in place is just a good thing to start. And the younger you start with it, the more you understand. You could stack on top of it as you get older, and then get some of those whole life policies and those policies that pay out, have the cash that you could do other things with. Just getting that early understanding helps you protect your generational wealth as well.
Mm-hmm. Okay, just a follow-up question to that. Now, when you were saying about $20 a month for a 20-year-old, is that an actual number, or are we just throwing out because $20 a month for a lot of young people, that's Starbucks, or I should say, but that's their coffee run on any given day, which could seem like a very small sacrifice if that's really how much it is. That really about the range?
That's really a number, depending on your health.
Yeah. Mm-hmm. And in addition to that, Sharon, we can educate them on the fact that some carriers will give them a discount for having that additional policy. So it will on their automobile insurance. So, we can look at ways to save money for them as well as getting the protection that they need. I think, and again, talking to our young people, many of them are very savvy nowadays about finances, and they want to establish ways of earning income, and the income potential of life insurance is very important. And I also talk about that to my young people. And they also understand that, they have a future. And some of our young people do have other responsibilities that they want to be protected, like their car loan responsibility. They want to have that money. If something happens to them, they don't make it home, they want parents or whoever to have that car, with their passing. Or they have, our young people know that they can get additional cash value out of the policy, and they like that idea, saving for their future. I mean, they're really, our young people, a lot of them are pretty smart and savvy nowadays on finance.
Yes.
Mm-hmm.
Oh, definitely. Yeah, young people are making some real cash around here.
Mm-hmm.
Yeah, and that's wonderful to see. So being able, I think those are some really great examples of how and why it's important of having life insurance even at an early age. I appreciate those. Someone's asking, what about life insurance policy that you have through work? There are those policies through your jobs. Is 10,000 for such an amount, you can up that up to. Why do you need another policy? Is that enough to just use your work life insurance? What do you think, Gwendolyn? And then we'll bounce back to you, Pia, if that's okay.
Mm-hmm.
Okay.
Let me ask you this: how many jobs have you had in your career? Some of us have had multiple jobs, or if you're planning to do something else, go to school, become an entrepreneur, it's great. Take the job insurance, but it's not portable in most cases. And in many cases, even the amount of coverage you have, if you retire or leave the job, if you can take that coverage, it diminishes greatly. So I think, so that's why having your own insurance is also very important. So take the coverage. Sometimes it's free at the job. That's great. But then also have your own private plan. It's like anything. You want to have your own plan to take with you to manage yourself.
Okay. So take both, especially if it's free or low cost. And then you want something along with all the other assets that may not be enough coverage.
Absolutely.
To Pia.
Sometimes that life insurance policy at your work is only active if you're active on the payroll, if you're an active employee. So let's say something happens and you have to get short-term disability, and now you're not actually working, you're just trying to recoup or recover. Sometimes those policies don't pay out. And another thing is they take a long time to pay out. So you may not have those monies going to your family members that need that in time to bury you or do whatever they need to do right away with their needs of whatever needs to be met. So those are the reasons that we always say get your own policy outside of work. Then you don't have to worry about, oh, is it active now? Is it not active? How long is it going to take to pay out if something happens to me?
Great questions. Thank you for that, both of you, and those answers to that. I wanted to ask him a follow up with that. Is there some coverage generally better than other ones, or having none at all? What mistakes do people make when they purchase insurance based only on like the monthly payment? Like, this is what I can afford. It's going to run me about X amount of dollars a month, but this is what I have right now. So what would you generally say for the sum coverage? Coverage is generally better than having none.
Yep, having some coverage is better than having none. If you have a dollar amount that you need to stay within, hopefully your agent may be able to tailor something depending on what kind of insurance we're looking for. If you just get the bare minimum, like George Lynn was saying, that state minimum is not great, but it's better than nothing. And then build from there. Okay, I have a little bit more money now. Now I can raise my liability limits to match my income. Or now I have a little bit more money when we're looking at homeowners and renters. We can raise some of these limits to actually match what I need them to be. But just having something is definitely better than nothing.
Yeah. Then how would you prioritize that? Like, what should you get first? Say you have all the things. You have a house, or renting, and you have a car, and you definitely life insurance because you are with us. Well, how would you prioritize?
I would say, like I mentioned before, the part that the law requirements, I would prioritize the automobile. A lot of us, the most risky thing we do in life is drive a vehicle. That's where a lot of your risk is. So having some type of insurance on your vehicle and then move on from there. If you have a job, like George Lynn said, you could take that work life insurance policy. You can get the renter's insurance policy or homeowners, because you want to be able to protect where you're living and if you need to go live somewhere else, like we spoke about earlier, and then maybe move on to the life insurance. And then, like we said, we could get them in the small increments, get the state requirements for the auto. Maybe if you have $100,000 in personal property, but you just get a policy for maybe 30,000 or 40 to start, just something to get you started. And then as you're able to, you can take that up. That's where those semi-annual and annual meetings with the clients come into place, because you can come in now, I have a little bit more. Now we can bump your limits up to be actually what you need.
Yeah, that makes sense to me. So as if we're talking about costs, let's dive a little deeper into like practical ways. And if you both have already touched on some ways that people can save, but are there some other practical ways? I think I heard George Lynn talk about bundling policies. And for viewers who are, especially our younger viewers who may not understand what bundling is, let's make sure we are explaining the terms as we discuss. But what are some practical ways people can lower their insurance costs without leaving themselves financially vulnerable? And we know bundling is one of those. George Lane, you want to jump in there first? Or
getting back to our youthful drivers, those who are in under 25, and many carriers can get a discount for taking special driving credits or driving courses that are connected to that insurance carrier. And then you also have good students. So someone who is a B or better average, they can also get discounts for being a good student. So responsibility is all connected to pricing, as well as I said before, your credit. And of course, always being a good driver. That's always going to help. Less tickets, no accidents, no suspensions. All of that makes a big difference. But then when we go over to our into our home, having an alarm system or having an updated roof or updated utilities. Some of our communities are older communities, and you can buy a beautiful house maybe at a better price, but have you updated the utility? Have you updated the heating, the plumbing systems? What about the roof? What about, the AC? All of that makes a difference, because the wiring is also what can cause a claim. And insurers look at the age of a property in order to determine the premium. Those are a few of the discounts we talked about, even taking on whatever policies that you can get from your employer. If you can get disability from your employer, if you can get life from the employer, if you can sign up with a 401k with your employer, that's going to help you out as well. So those are a few things that come to mind for me.
Yeah, awesome. Tia,
Another
you
thing
going
is
to say
looking at
something
your
else?
deductible. Yeah, just making sure you're looking at your deductibles. I know historically people would get $1,000, $1,500 deductibles. And now those deductibles, some carriers don't offer them. And if they do, your premium is pretty steep with those lower deductibles. So just having maybe a higher deductible, like we mentioned earlier, maybe starting a savings account for that if you were to have a loss, but having a higher deductible can help with your premium as well.
Yes, a higher deductible is also kind of scary because if long as it's affordable, right? Like having a higher,
Right.
setting that money aside, so that if something occurs, it is already kind of built in that you have it. Or yeah, what's your recommendations around that? Because I know some people have like $1,000 deductibles, or sometimes it's even higher. And when life happens or crisis happens, and then insurance takes that money off the top, right?
They do. We want to make sure we understand that these policies, especially when we're talking about homeowners, this is not a maintenance policy. This is a policy for a catastrophe, for a big loss. Make sure you have a home warranty. Make sure I know some of XL Energy or Centerport Energy have some plans that you can get for warranties for things that break down. Those are more like a maintenance policy, but your home insurance policy is for a catastrophe, for a big loss. So you want to save that for something that's pretty spendy, because what happens is for every time you use your insurance, your premium is going to increase. And with your home, if you have more than 2 homeowners claims in a 5-year period, some carriers won't allow you to have coverage with them anymore. And you get some pretty steep premium increases for about 5 years. So you don't want to file a claim for $2,500, let's just say as an example, and now you're paying maybe $10,000 more with the steep increases. You just want to make sure that you kind of level that out and say, okay, maybe I need to pay for this out of pocket and maybe not. That's why it's good to have an advisor, someone that you could talk to about it. Let's see what it is. Get someone to come out and take a look at what the loss is and how much it's going to cost to repair it. Look at it against your deductible and see, okay, does this make sense? Because if it's not far enough over the deductible, you don't want to do it and just get like $1,000 payout. And now you're paying more premium for that. So just making sure we understand what this insurance is actually for.
That insurance is not a maintenance product. Right? Okay.
Yes.
Yeah. Okay. Let's put it very straightforward.
Yes.
I think I had another question that I was thinking about, but it sounds like George Lane, you were going to jump in and say something.
Yeah, absolutely. I was thinking about the fact that with an advisor, with an agent, you can call and ask them, well, what do you think about, making a claim? I have, and instead of, going onto the company's website and filing a claim, there have been so many people who felt like there was something that happened in their home. And of course, they wanted to make sure that it was covered, but it wasn't a part of the contract. Or as Pia said, it was just a few dollars over their deductible, but now they have a claim. And it's not a very satisfying feeling to say, to get someone or the company to say, it's only, you're going to get $100 over your deductible. It's not satisfying to the company, to the customer, or to the company. So it's really good for you to reach out to the agent and talk to them about your concerns. I also think that that a higher deductible does preserve your claim, your premium. And if you've been a good driver, if you've had no losses in your home, you maintain your home, really consider it. You can always change it. It's not something it's in stone forever. So if there comes times when a person says, I don't feel comfortable about this deductible, call your agent and you can change it.
Okay, I see there's a couple questions in a chat from Lane Boo 123, and Lane Boo is asking, like, if a rock hits my windshield, do they need to come up with 1,000. And we were just throwing that out as an example, right?
Mhm.
As a deductible, a higher deductible. Lane Boo followed up with another question that says, that's a lot. Is there any other option? So $1,000 may be too much. And to answer both questions there about the rock hitting the windshield and $1,000 deductible, who would like to take it?
I can speak to that. Sometimes you can get glass coverage that has no deductible. So you want to look at your policy. You can have a policy that allows you to get your glass repaired with no deductible. And then with your automobile coverage, there are different deductible options. There's usually a $500 option. Sometimes there's a $250 option. But like we mentioned before, that does make your premium a bit higher. So take a look at your policy language and see if you have that coverage with that glass with no deductible, which would be good for you. And then you could just take it to consideration what you're paying right now for your premium and get an estimate on what the lower options would be and how much out of pocket that would be for you.
Great. Good answer. Yes. George Lane, go ahead.
Yeah, absolutely. And oftentimes, if you're a good driver, your lower deductible or the zero deductible will be very minimal. So explore those options. And I think that's where sitting down, asking the questions, and making some calculations will make a difference for you.
Absolutely. And spending the time looking at that coverage and saying, Lane Boo is saying, no deductible. I didn't know that. Yeah. So there are those cases, especially with windshield repair. So to speak to that, if someone leaves tonight still unable to purchase every type of insurance, so we're talking about life insurance or renter's mortgage, health insurance, driver and auto insurance, what's one step they can take this week? So we want to move them and advance them in a way that's tangible. What's one thing that they can take this week to move closer to protecting themselves, their family, and their finances? And again, this is around generational wealth. We're always talking about that in the background. But what would you say before we leave tonight? We want to make sure that they know they could do.
I think that a person should sit down, and if they're a couple or have a partner, sit down and evaluate every possible asset that they have, and really do many carriers or many websites they can go on and look at a needs analysis. I think it's very important because you don't know what you don't know until you sit down and evaluate it. And then once you've done that, then it's in your face and you can tell where, what do I need to do next? Once you've, and you can even use, there's so many tools online, go online and use the online tools. Most of the carriers have an online tool to assess your insurance needs. And then after that point, you find an insurance advisor that you can sit down and really open up to and talk about the options. And there's a lot of different policy options that they can purchase. As I said before, it can be something for now or come back later and pick up the difference.
Awesome. Something you can do this week, needs analysis, and then figure it out for now, not yet, and then keep it moving. Pia, what do you want to add to that?
I would say something to do right now is reach out to an insurance person, an insurance advisor, an agent. Start that relationship because that's going to be very important in this journey, in this process. Go online and see who you would like to work with, or however if you have someone in your community or anyone that you know or friends or family can recommend, and start that conversation with them now. And then you can move from there. That needs analysis is great, George Lynn. That was a great piece of advice as well.
Yeah, absolutely. I appreciate you both sharing that. What can people do right now, today, to get started? And that needs analysis and building that relationship with an agent. Georgia, and we're not leaving off people who like to go. I know you pointed out, go online, look at some stuff,
Mhm.
but talk to real people.
Yeah, absolutely.
Go do that too and figure that out. I appreciate your things. Before we leave tonight, I want to give you an opportunity. Is there anything else you would like to share? That one last thing for our viewers? Because you have given so much of your expertise tonight. And I think we've covered a lot of territory in all the areas. But is there something that I missed that you want to share?
Well, Pia and Sharon, I think it's it's good to have a conversation. These wealth is generational. Wealth is what we're all trying to build over time, and so I think it's great to have these kinds of forums for us to talk about, for us to share, and not be embarrassed. I found that people get embarrassed about insurance and finances, but we're all trying to move forward and do the best that we can. And I think that would be my piece of advice. Get an insurance broker and talk with them.
Awesome. Yes. Yes, yes, yes. Transparency.
Definitely. And don't be embarrassed. Everybody,
Don't be
we're all in
embarrassed.
different places in life. Just
Mhm.
open up and talk, and you can learn a lot. So, yeah, I agree, George Lynn.
Yeah, I do too. That's awesome advice moving forward, especially as we continue our conversations around generational wealth. We have to be able to take some of that embarrassment, that shame out
Mhm.
of the equation and just move forward if we're moving forward, right?
Yeah.
Tonight, we hope that everyone, as we leave, knowing and understanding insurance doesn't have to be overwhelming. Whether you're fully covered, just getting started, or somewhere in between, every step you take towards protecting yourself and your family matters. Thank you again, George Lynn and Pia, for sharing your knowledge, expertise, and practical advice for us tonight. The time really flies once we kind of get deep into our discussion. I love it. But before we go, everyone else, our listeners, thank you for joining in our IT tech team. We want everyone to mark their calendars for our next Beyond Table Talk, which is held every fourth Wednesday, where we'll continue bringing real conversations that help strengthen our financial futures. Again, I'm going to ask everyone to please take a moment to complete the short wrap up survey. Whatever feedback you have, whether it's a pre survey or the wrap up survey, whichever survey you choose to complete, please do that because your feedback helps us continue creating conversations that inform, equip, and empower. Thank you for joining us tonight. We'll see you next time.
Thank you for joining us for another episode of Beyond Table Talk. We truly appreciate you, our viewers, and we want to give a special thanks to our moderators and panelists for sharing their wisdom tonight. You can check out their bios to learn more and their contact information. We also want to thank our sponsors who make these conversations possible. And we encourage you to stay connected. Follow us on social media, engage with the conversation, and share with your community. If you'd like to sponsor an episode or get involved, we'd love to have you to be a part of this journey. Scan the QR code. We take this moment to thank our incredible team that brings this program to life. Before you head out, please take a moment to fill out the post-checkout form. Your feedback really matters. Let's keep the momentum going, and remember, the most meaningful conversations don't just happen at the table, they live beyond it. See you next time.